Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a big story to kick off the show, as Wall Street saw a significant rebound on Thursday, with major indexes ending sharply higher after U.S. President Donald Trump announced that he had canceled planned strikes against Iran. This news came just hours before the expected strikes, and it seems to have eased tensions in the market. The S&P 500 gained 126.86 points, or 1.75%, to end at 7,393.85 points, while the Nasdaq Composite gained 637.78 points, or 2.53%, to 25,801.47. The Dow Jones Industrial Average rose 928.72 points, or 1.84%, to 5,847.50. These gains are a welcome relief for investors who had seen the market pull back in recent days due to concerns over the Middle East conflict and its potential impact on inflation. But the big news today is the historic listing of Elon Musk's SpaceX on the Nasdaq. The company priced its initial public offering at $135 per share, raising a record $75 billion and valuing the company at $1.77 trillion. This makes SpaceX one of the most valuable companies in the world, and it's expected to make Elon Musk a trillionaire. We'll be keeping a close eye on how SpaceX performs in its first day of trading, as well as the broader market trends. Will this momentum continue, or are there other factors at play that could impact investor sentiment? We'll explore these questions and more as we delve into the world of stocks and finance. For now, it's clear that the market is reacting positively to the news out of Washington, and investors are eager to see how things will play out. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into a complex and multifaceted story that's been making headlines lately. SpaceX, the private aerospace manufacturer and space transport services company founded by Elon Musk, is set to go public with an initial public offering, or IPO, valued at a staggering $1.75 trillion. This news has sent shockwaves through the financial world, with many investors eager to get in on the action. However, amidst all the excitement, Elon Musk has found himself at the center of controversy once again. The billionaire CEO has been sharing posts on social media platform X that have been criticized for promoting anti-immigrant sentiment. These comments came in response to a violent stabbing incident in Belfast, where a Sudanese refugee and legal resident allegedly attacked an Irish man. Musk's posts have sparked outrage, with many accusing him of fueling hatred and intolerance towards immigrants. The UK regulator Ofcom has stated that it will not reprimand X for surfacing or promoting these posts, at least not for the time being. Meanwhile, Musk has denied that his social media commentary contributed to the riots that broke out in Belfast, instead blaming murderous migrants for the public's anger. It's worth noting that SpaceX's IPO filing with the Securities and Exchange Commission did acknowledge the potential risks associated with Musk's public commentary, stating that his actions and statements could have a positive or negative impact on the company's business and stock price. Despite this, investor appetite for SpaceX stock remains strong, with retail traders reportedly ordering $100 billion in shares ahead of the public offering. As we consider the implications of this story, it's essential to approach the topic with nuance and balance. On one hand, Elon Musk's comments have sparked important conversations about immigration, free speech, and social responsibility. On the other hand, his words have also been criticized for perpetuating harmful stereotypes and fueling xenophobia. As we navigate this complex issue, it's crucial to prioritize empathy, understanding, and respect for diverse perspectives. The intersection of technology, finance, and social justice is a delicate one, and it's up to us to engage in thoughtful dialogue and critical thinking. Welcome back to the Riskwiser Zone, where we delve into the world of finance and economics to bring you the latest insights and analysis. As we wrap up today's show, let's take a closer look at the recent developments in India's economy. The World Bank has raised India's FY27 growth forecast to 6.6% from 6.5%, citing reduced U.S. tariffs and the anticipated benefits of upcoming free trade agreements. This is certainly a positive development, but it's essential to consider the broader context. The ongoing Middle East conflict and higher energy prices are expected to weigh on private demand, which may moderate economic growth from 7.7% in FY26. India's Finance Minister, Nirmala Sitharaman, has also emphasized the need for better, bigger, more effective, and more representative multilateral development banks to deliver greater financing to developing countries and emerging economies. This is a crucial point, as these institutions play a vital role in supporting economic growth and development in regions that need it most. The World Bank expects trade agreements and ongoing structural reforms aimed at improving the business environment to bolster foreign direct investment inflows over 2027-28. This could have a significant impact on India's economy, particularly if the country can capitalize on these opportunities to drive growth and create jobs. As we consider these developments, it's essential to remember that economic growth is often a complex and multifaceted issue. While there are certainly challenges ahead, India's economy has shown remarkable resilience in recent years, and there are reasons to be optimistic about its future prospects. So, what does this mean for investors? As always, it's crucial to approach the market with caution and consider multiple perspectives before making any decisions. The Indian economy is likely to remain a key player in the global landscape, and those who can navigate its complexities may find opportunities for growth and returns. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.